making moves.
Yeah, it's your boy Crypto Blood. Welcome to another episode of My Two Satoshis. It is October 18th, 2019. Shout out to the tech geek out there on YouTube for the song request today. We've got Big Sean, Moves, D-Town Stand Up. What's good, people? Hope you guys are doing well today. And welcome to yet another episode of My Two Satoshis. Today, we're going to look at crypto exchange Poloniex to spin out from Cirlce. If you guys don't recall, Cirlce bought Poloniex maybe 2 years ago. They acquired them. Looks like now they're about to jump back out on their own. We're going to take a look at the details on that. I don't know anyone trading on Poloniex. So maybe that was a bad move for them to be acquired by Cirlce. I don't know why they are spinning out. Maybe it'll explain it in this article. Second article, 18 millionth Bitcoin to be mined today, while only 208 days left till Bitcoin halving. What's going to happen, people? I think Bitcoin is going to start surging here in the next couple of months, especially going into the holiday season. You know, Thanksgiving, Christmas tend to be in a time of the year that Bitcoin, if it's in a bull market, you'll see some action to the upside. So we'll take a look at this article on that tidbit. And then last article, CoinDesk. FATFA joins BIS in calling stablecoins a global risk, citing money laundering concerns. Here we go again. Let's take a look at what they have to say about this. FATFA, if you guys don't know, is the agency that's really coming down on a lot of these wallets, hardware wallets that many of you use. What they're doing is making these hardware companies comply with their regulatory framework, or whatever you want to call it, to essentially say if they subpoenaed them, they would give up information that they have on their users. Just keep that in mind, man. This is a war going on privacy. Cryptos were created for that to be a possibility in this NSA, surveillance state that we live in. So, but before we get started, just let you guys know out there, anyone in the crypto space, I've got one slot available now for the advertising that rotates in the right hand corner of my videos, on at least my 2 Satoshi videos. So if you're interested, drop me a line at ads@cryptoblood.io. You'll get a permanent link in the description of each video, my 2 Satoshi video, and in addition to me mentioning your company in the video. So again, hit me up, ads@cryptoblood.io if you're interested. We've got 15, 30, and 60 episode packages. Holla at me. And speaking of sponsors, we've got Moon Lambo as one of my channel sponsors. They have great apparel out there on shopmoonlambo.com. So check those guys out. Use the word CryptoBlood10 to save 10%. All right, let's get into it. Heat map for today. Bitcoin down 1.45%. Its dominance is at 65.9%. And it's currently trading at $7,931. Ethereum is down 1.6% as well to $173. Kind of off the lows though, so these percentages don't reflect exactly where we are, because we're off the lows. So we were definitely lower than this percentage wise with Bitcoin, Ethereum. I'm not sure about EOS. It looks like EOS as well. Most of the top coins, it looks like. So EOS is down 1.5% to $2.89. Binance down 0.73% to $18.21. Litecoin down 2.63% to $53 flat. Speaking of Litecoin, had my man John Kim on yesterday, kicking his session. So if you didn't see that, please check that conversation out. Excellent. Always great to have him on. That guy spits more wisdom than the Dalai Lama. He's the Dalai Lama of crypto. How about that? So check it out when you guys get a chance. And as far as the technicals go for Bitcoin, as I've stated, I'm not bullish until we get above 83.54, that yellow line there. And as you can see, we are off the lows. We had touched all the way down to 7,800 I should say. But it looks like I can draw a new trend line here. So honestly, if we can get above 88,000, trading above 8,000 would be a bullish confirmation for me, now that I've drawn this trend line. And then the subsequent one would be 83.45, and then eventually we need to get to this trend line, the purple one there, at around 8,500. So let's get into the first article from the Bitcoinist.com. Crypto exchange Poloniex to spin out from Cirlce. It says Poloniex, one of the earliest crypto trading platforms that targeted U.S. markets, will spin out from Cirlce. Despite the efforts to build a fully compliant market, Poloniex is shutting its doors for US-based traders from November. So Poloniex will spin out into a separate company, Polo Digital Assets Ltd, in partnership with an unnamed investment company, announced Cirlce. In the future, the crypto exchange will continue to exist as an international entity, kicking off with promotional zero-fee trading until October 21st. Beginning immediately, no new registrations will be created for U.S. customers, the team announced, citing the need to stay competitive. Currently active U.S. traders will have until November 1st to finish up orders, and withdrawals will be open until December 15th. Cirlce Inc. acquired Poloniex in February of 2018, while the bear market was only just starting. In the meantime, Poloniex was slowing down in its crypto trading activity, and after the acquisition, Poloniex aimed to reinvent itself. The exchange gradually shed its holdings of Tether USD, then filled up the fully transparent USDC stablecoin, but that was not enough, so Poloniex went on a crypto delisting spree, removing any coin that could be deemed an unregistered security or was related to gambling in any way. That's every darn coin, if you ask me. Currently, volumes on Poloniex have thinned out to around 18 million in 24 hours, a few times lower than the currently leading exchanges. With the low tide of enthusiasm about altcoins, Poloniex further strengthened its influence. The exchange carries only about 101 crypto trading pairs right now. Poloniex is leaving the US despite the fact that Cirlce Inc. managed to gain BitLicense, the crypto business license to operate in the state of New York. Until recently, the exchange had a chance to remain a US-based entity. So if you guys don't recall, Poloniex tried to evolve from its reputation as a risky crypto exchange after the hack in 2014. That was a big hack that took off more than 12% of its Bitcoins. Over time, the exchange had a reputation for frequent outages, which prevented crypto traders from making gains. One of the bigger blows on Poloniex was the margin call for clams traders. An illiquid coin made a surprising move, leading to liquidations and the taking of about 18,000 Bitcoins from lenders. Interesting. So you guys let me know your thoughts about Poloniex leaving the US. I don't think they had a chance anyway, to be honest with you. With Binance coming in, I think I may have created a Poloniex account once in 2015 and really never even used it. So yeah, I'm not a huge fan of Poloniex, never have been, and I actually thought they would go under at one point. There was a lot of rumors around, swirling around about that exchange in 2018, but they're out of here, at least the US. Next article, CoinDesk. FATFA joins BIS in calling stablecoins a global risk, citing money laundering concerns. Stablecoins pose a money laundering and terrorist finance risk to the world, the Financial Actions Task Force said on Friday. They can come up with a better narrative or excuse. It's the same one over and over again. I know I'm sick of it. I'm sure you are too. In documents released after this latest meeting, the Intergovernmental Organization referred to cryptocurrencies as a major strategic initiative and said cryptos whose values are pegged to fiat currencies could have a particularly big impact. Some 800 representatives from 205 jurisdictions met on October 16th through the 18th to discuss various issues under the jurisdiction of FATFA, led this year by Zhangming Liu of China, according to the publication. Crypto-related concerns were front and center. While the document addressed cryptocurrencies broadly, it singled out stablecoins on multiple occasions, writing, emerging assets such as so-called global stablecoins and their proposed global networks and platforms could potentially cause a shift in the virtual asset ecosystem and have implications for money laundering and terrorist financing risks. There are two concerns: mass market adoption of virtual assets and person-to-person transfers without the need for a regulated intermediary. Together, these changes could have serious consequences for our ability to keep people in control and limit their freedom. I mean, detect and prevent money laundering and terrorist financing. Oh man, the second document, titled Money Laundering Risks for Stablecoins and Other Emerging Assets, said that FATFA will continue to examine the characteristics and perceived risk of stablecoins and may even clarify or update its virtual currency guidance to better address this class of cryptocurrencies. During the session, FATFA determined how it would evaluate countries' implementations of its last guidance on digital assets and will add this process to its current mutual evaluation procedure. In June, FATFA called on national finance services and banking regulators to implement a strict know your customer and anti-money laundering regime, going so far as to require exchanges and wallet providers dubbed virtual asset service providers. See, this is what I'm talking about, wallet providers here, to hold KYC information for recipients of transactions originating on their platforms. Countries that have already undergone their mutual evaluation will be required to report back during their follow-up process on the actions they have taken in this area. So again, this is what we're seeing them try to ring fence the crypto markets, but gladly, this is what I was telling people, and I think I was telling Mike from Rethinking a Dollar this. Unlike any other technology right now, Bitcoin cryptocurrencies cannot be ring fenced. If they want to lock down these hardware wallets and make their customers give up their KYC to even have a wallet, fine. I'll just create a paper wallet. I don't need your hardware wallet, technically. Okay, these are all layers on top of layers of the base protocol, where if you learn enough about the technology, you can operate at the zero level, the zero layer of this protocol, of any of these blockchain protocols. So that's the great thing in my opinion. But yeah, this is crazy. This is definitely crazy. And it talks about identity, digital identity as well. They're trying to make companies head toward that initiative as well. So it's crazy, man. It's really crazy. Let me know your thoughts on this, though. Last article out of CoinSpeaker: 18th millionth Bitcoin to be mined today, while only 208 days left till Bitcoin halving. I think we're going to start seeing Bitcoin rise, people. While Bitcoin is seeing some selling pressure around 8,000 levels, currently the 18th millionth Bitcoin is soon to be mined. The Bitcoin network is set to achieve another milestone as the 18th million Bitcoin shall be mined today. Putting some light on this matter, Morgan Creek Digital founder Anthony Pomp tweeted the same earlier this week. He said this Friday the 18th millionth Bitcoin will be mined. There are only 3 million left. It goes on to say, after today's milestone, nearly 85% of the total Bitcoin supply to be there is in circulation, it says. And so thus we are now only 3 million Bitcoin short of reaching the total supply of 21 million. As of writing this article, the data on the Bitcoin data website, Bitcoin Block Half, shows that we are just 1,200 Bitcoin short of reaching the 18 million milestone. Let's see where we are right now. So we're even less than that now. We're only 250 Bitcoins away, guys. Moreover, it says everyone is currently staring at the upcoming Bitcoin halving event just 6 months away from now in May of 2020. Bitcoin investors have pinned their hopes on the halving event, which is likely to trigger a Bitcoin rally in the market after a successful Q2 and Q3. The start of Q4 2019 hasn't been impressive for Bitcoin investors. Bitcoin is seeing downward selling pressure. According to the current estimates, the upcoming Bitcoin halving will take place on May 14, 2020. This will be the third Bitcoin halving event. The Bitcoin halving was designed by its creators, wherein the mining rewards for adding new Bitcoins to the blockchain network are reduced to half the amount it was prior to the halving. This was basically introduced to make Bitcoin's release more scarce with time, and the idea behind it was to trickle the demand for Bitcoin, thereby causing its price to surge northwards. So Plan B out on Twitter said we're about 6 months before the May 2020 Bitcoin halving. In 2012, Bitcoin jumped from $5 to $12, a 2.3x return in those 6 months before the halving. 2016, Bitcoin jumped from $350 to $650, which is a 1.7x return. So if I had to come to a conclusion with that, we are probably going to see somewhere between a 1.5x return from this next halving, as we're seeing a trend going downwards as far as the pumping of Bitcoin prior to the halving. Why is that? Maybe because of the law of large numbers. That could be, have something to do with it. But yeah, so maybe we'll see a 50% move from here, which would almost take us back to essentially 10,000. Like 11,000, 12,000. We'll see. We will see. I mean, that's without any external geopolitical financial issues, right? That's solely on the halving. So you add other elements on top of that, then maybe we can get to 2x or more with this next halving. To the contrary, though, Rect Capital states that Bitcoin behaves similarly to the last two halving events. Its price will be anywhere between 385,000 and 425,000. I'm gonna tell you right now, that ain't happening. That is not happening. They're using a stock flow analysis, Twitter user data center derived and prediction model using machine learning, blah, 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 whatever. It ain't happening. We ain't gonna see nowhere near $385,000 in 6 months. Sorry. Been in this game too long for you to sensationalize this to that magnitude. I'm sorry. Not having it, not believing it. Again, you guys let me know your thoughts. Where do you think Bitcoin will be by the halving? I have to agree with the first guy, Plan B. That looks more realistic. The trend is lower with each halving as far as the price appreciation, but 1.5, or I would say somewhere around 1.5, even 2. If we do a 2x from here, that puts us at around 16,000. That's believable. It's definitely believable and realistic, I should say. Anything's possible, but something more realistic, I would say 16,000 to 20,000. My personal gut check on that. And that's, again, X any other events. Those events that we can't predict, right? This halving we know we can bank on. So you guys let me know your thoughts on all 3 articles for today. FATFA saying that stablecoins are a terrorist and money laundering risk. Poloniex spinning out from Cirlce, and the 18th million Bitcoin mining today. We got like 250 coins left. Congrats to Bitcoin on that. Shout out again to my man, the tech geek out there on YouTube for the song request, Big Sean Moves. Make sure you guys like, share, and subscribe, and click that bell to be notified about unbiased crypto news reported by yours truly, Crypto Blood. I'm out of here, people. How?
Yeah, I do. Look, I'm a don.